If you've listened to our podcast before, you know that we are good friends with the Money Vikings, and we think that they have a lot of good knowledge and, just a wealth of knowledge to offer. About 60 years worth of knowledge and trading experience between the three, between Greg, Bob, and Jerry. Now, I have some good news for you, because they have announced a premium program. It's the Money Vikings MVP premium content, okay? And I have to tell you this right now, if you are new to the market, you have got to have somebody to mentor you through it, because 75% of all new market entrants will lose all of their money in the first year, and you have to have somebody that will guide you through it to prevent you from making these mistakes that most people do. And with this MVP access, this premium content, you will get direct access to Greg, Bob, and Jerry on Discord. That's the most important feature of this program, in my opinion. They do also have access, they will give you access to other things such as hot trades, weekly newsletters, technical analysis. Hey, it's ad free. That's cool too, right? Guides and tutorials, tools and custom technical indicators, exclusive analytics and informative articles, and then, as I said, exclusive direct access to Greg, Jerry, and Bob, who have over 60 years of experience between them. Now, if you listen to this podcast, you need to get a pencil, and you need to get a paper, and you need to write this down, because you get 25% off. Once you go to moneyvikings.com and you sign up, you'll get to enter in this code. It's capital TMV P1CK1NS. That is all capital TMV P1CK1NS. An easy way to remember that is TMV Pickens, but the one replaces the I. So go to moneyvikings.com, claim your discount for being a Chinchilla Picking podcast listener, and conquer your financial freedom.
Everybody, this is the Chinchilla Picking podcast. It is September 21st, 2021. As always, we hope to be entertaining, educational, and uplifting, because we want everyone to make money. Brandon Beaver, how are you, man? How are you?
I'm good. How about you?
I'm doing well. Had some good day today. You know, Costco says that they're having trouble ordering toilet paper, you know.
Oh, gosh.
I know, right? Let's not start down that road again, because I remember how that was. Fights for the toilet paper, you know. They bring it out to restock the shelves, and people are grabbing it before the guy can even stock the shelf. I remember that. So, fun times. But it was a lot cooler today. Actually felt like fall, so I'm enjoying the weather.
Yeah, me too. And, COVID's starting to... Looks like it may have peaked, the Delta variant and everything, and so
I don't know, man. All the see, we live in Ohio. For those who are listening who don't know, and in Ohio right now, the whole map is red. They haven't changed one single county.
Yeah, but it's been like that since the beginning of it. We've been a high transmission area for about a month now, I think. At least Butler County has.
Oh, yeah. Yeah,
I'm still sticking with my reopening play. Delta Airlines. I'm still sticking with that. I also like Wyndham hotels, which I think is actually Wyndham Resorts. I don't want the Wynn casinos.
Wyndham or Wyndham?
Wyndham. It's one of those. It's not Wynn casinos. Don't mix those up. I don't want anybody going into... What's crazy, like these reopening plays, Las Vegas Sands, and and Wyndham Casino, or Wynn Casinos. Wynn Casinos is what I'm talking about here. I had no idea how much revenue came out of China. No clue.
Oh.
And I had no idea that Macau was like the gambling capital of the world.
Yeah. Oh, hey, hold up. Because now that you bring it up, this is not something, guys, we talked about ahead of time. So now you bring it up. Let me pause right there. Let me finish our introduction, then we'll go right into that. Because there's a few things since you brought it up, right?
Okay.
All right, guys. So our introduction, rules. Brandon and I get together ahead of time, 5 to 10 minutes. We tell each other what we're going to talk about. We don't actually discuss it. You get the live discussion here on the air, just such as you were hearing about Wynn Casino here. And this is how we do things. I was meant to go first. Looks like Brandon started us off with Wynn, but Brandon, go ahead and win.
Okay.
Do you have the numbers pulled up right now?
Yeah, I'm looking at it right now.
Because it is quite a big chunk. And in fact, there was a gentleman who actually came out on TV and called out the CEO of Wynn and said, "Look, man, I would love to go over the numbers with this," or not the CEO of Wynn, CEO of another financial firm, and said, "Look, I would love to go over the numbers with him because he's wrong. Wynn should be valued at $50 a share, and it's currently sitting at 84. I have a short position on it. It's overvalued. You know, they're hurt from the China and the overregulation there."
So the stock that I like trades under WH. That's Wyndham Hotels and Resorts. And they franchise hotels. That's what they do for the most part of
these different thing than the casinos.
This
You're
one,
about the hotels and housing. Okay,
so I don't want them
different things, apples and oranges here.
Yeah,
All
so
right.
I don't want people to get confused and go buy Wynn, which is the casino stocks. Now that I'm looking at it, Wyndham Hotel Resorts. That's what I like. I don't want the casino stock. Wyndham actually has like an 85% profit margin on their franchise model, which is most of their business, which is pretty cool. So that's a good reopening play in my opinion. On the other hand,
the problem with casino is the Macau and how much money is coming out of Macau and the casinos there. And then with the Chinese overregulation lately, everybody's worried that they're going to go ahead and cut into that and take that away from Wynn. And that's a big chunk of Wynn, so everybody's saying it's overvalued and should be cut down.
Yeah, it's huge chunk, and it's a huge chunk of Las Vegas resorts as well. So WYNN is what I don't want you to buy. That's the casino portion of it. Wynn Resorts Limited, holding company, engages design, development, and operation of destination casino resorts. And if you're buying this or you're buying Las Vegas Sands, you're not really buying that much of Las Vegas. You're buying more Macau, China, which has taken a huge hit right now. And lots of regulations coming their way. They're doing I think they put they're doing like a 40-day brainstorm on what regulations they should pass on gambling. And when you have a company, or, well, not a company, but a country that is seeming to go more down the regulatory route, maybe more embrace their communist roots, gambling's not the place to be in China. So regarding these casino stocks, you have to be really, really, really careful and make sure you're not getting a huge exposure to Macau. I prefer reopening. I just want to go with Delta, and I want to go with Wyndham Resorts, and I want to call it a day if I'm going to do those. Right now, I'm just in Delta. I'm not in Wyndham yet, but...
Gotcha. All right, cool. Yeah, I'm not a buyer of Wynn Casinos either, but Wyndham, I see where you're going with your reopening. More people traveling, more people going to vacation spots. You know, people are going around to the, Panama cities, to the Miami Beach, where all these type of hotels are, San Diego's, and, they're trying to get out and about and see places. So I get it. All right. One thing I wanted to talk about was a story I posted to Instagram, our Instagram page. If you guys are a follower on our Instagram, you saw the story I posted. If you're not a follower, please follow at Chinchilla Pickin' on Instagram. I went on there and I did this quick story. It was during Monday morning. I said the whole market's crashing, guys. It's just because of the whole Evergrande situation in China. It's not a situation we need to be concerned about with U.S. equities and U.S. markets. I believe personally that China is going to backstop Evergrande, if not all the way, halfway. They may let the company fail, but they'll backstop everybody who has residual effects from it. Something along those lines. So I said the U.S. equities are a good buy. And one of the ones I went on there to say was, I said coolers are already gapped up. I wouldn't necessarily get into cooler right now because that's one I've been calling on the show every single week. But I said NVIDIA is definitely one you would want to get into. I said let's get into it. You hold it for a day or two. You make your 1% to 2% very quickly, and you get out. If you would have bought yesterday at the time of that story, or maybe even an hour or two, maybe 3 hours afterwards, that before it started moving back up, you would have made your 2% by now and gotten out. So one of the reasons why I looked at NVIDIA is it's a semiconductor. So in times like this, when you see the whole markets just come crashing down, you got to look for those opportunities. You got to look for these companies that had no reason to be down. And for me, that was NVIDIA by a long shot. And it's mainly because of the semiconductors, and there's a lack of supply, a huge lack of supply worldwide. So the demand is through the roof. Demand is everywhere. And anytime they take a dip down like this, where there's nothing wrong with NVIDIA or its supply chain or its market share or anything right now, there's no news breaking about that, no fundamental news that I saw. So there's no reason for it to be going down. That's when you get into companies like that and you make that quick 2-3% return. And you look for those value companies in those moments. And it's good days like yesterday where you could take advantage of the markets and actually find these opportunities.
Yeah, stocks. Stocks that had nothing to do with the reason as to why the market's actually down. Those are your best bet. NVIDIA is one of them. SK Telecom took a hit too because it's an Asian stock, but it's in South Korea. It's a totally different economy. So, and I don't believe that this is a contagion. We have the data as of June 30th. BlackRock, UBS, HSBC, and Ashmore. They were the biggest holders of Evergrande's international bonds. But it was $1.3 billion, and $1.3 billion to those companies, that's not really that much.
Yeah, they could withstand that kind of hit and still be running just fine. They'll get through their day. It'll be a hit, but they can get through just fine. And for China to backstop those, just the bonds, it's a drop in the bucket.
Yeah. It'll be interesting to see how they react to this, if they backstop it or if they don't. And then another interesting thing that I'm watching here is that Evergrande is traded on the Hong Kong stock in a VIE structure, which is what everybody's so concerned about. If you buy into a VIE as an investor, do you really own the company? You really own just the VIE structure, right? But what kind of rights do you have to get your money back? So it'll be interesting to see how they treat international bondholders and stakeholders in the actual equity on the Hong Kong exchange, because it is a VIE.
A breakdown of what this VIE structure is a few weeks back on everything there. And there's been some talk that China's cracking down on these Hong Kong specific companies that are going through the structure through the Hong Kong market in order to set up a Beijing market and create this new stock market out of Beijing that it's going to be available for foreign investments.
Yeah.
That's a rumor on the street there.
We'll see. I wonder if it'll be, I don't know that it'll be available to foreign capital. I think they need it. And it would be very smart of them to make Beijing accessible to foreign investors and to direct companies. You can buy direct companies in China. They just can't be tech or education or anything data heavy. So manufacturing, you can still get direct shares of some manufacturing companies, but I just think it'll be interesting because there's so many VIE like stocks that are traded here in the United States and traded on the Hong Kong Stock Exchange. So let's see what they do with the Evergrande stakeholders. I think a lot of eyes will be on that.
Yeah, and like I said, I most likely see a combination of things, not just, well, we're not going to cover anything and, we'll cover everything. I see a combination from China on this one where they might let parts of Evergrande fail, but yet they'll cover the residual effects of it.
Yeah, I wouldn't be surprised if they just took it over.
Yeah, that's another possibility that was thrown out there.
There was some, cash-heavy state entity that took over Evergrande. That wouldn't surprise me at all.
I don't believe it should have moved the markets the way it did. Yes, that was a well overreaction. I believe people took it as an opportunity to rebalance and reposition their funds.
Yeah.
And that's why I believe a lot of that was, there's this news here. Let me take my money out of this company I've made already 10% from holding for 6 months or 15% and rebalance it into something else.
Yeah, well, everybody was worried about a Lehman Brothers kind of situation, which Lehman Brothers had $600 billion in debt. And it was a lot more of a systemic issue with Lehman Brothers. This company, Evergrande, has $300 billion in outstanding debt. What's interesting is about a year ago, they did have $600 billion in outstanding debt. So it was a little bit more comparable maybe to Lehman back then, but now it's about half that. Ray Dalio actually said that their debt is manageable, which is really surprising because yesterday they just missed 2 big bond payments. Now, they have a month of a grace period before it's actually called a default. So for the news organizations that are saying they already defaulted on bonds, they have not yet. They have a month before they're actually legally in default. So we'll see how that works out because they have more bonds due on Thursday. And they have a month grace period for that as well.
It's crazy that they still might have hope that they could pull themselves out of this.
Yeah, that's possible. Now, what's interesting is that all the top holders, BlackRock, UBS, HSBC, they've actually added to their positions in these bonds.
I mean, yeah, it's gone down a ton. I mean, why not? Well, at this point, Brady, what's the risk to them? They get bought up from the Chinese. How do they get the money on the VIE? Mm-hmm. Does China have to buy them out?
But BlackRock, UBS, and HSBC have all added to their positions in Evergrande.
See, and you know that sounds like PIMCO and Fidelity being safe, cutting losses, and it sounds like BlackRock in order to no, man.
Yeah.
Let's dip down. Let's get in, lower our cost basis, and let's wait for a jump back up.
Yeah.
Or China to buy us out.
Yeah,
but are they going to get bought out by China? And that's my question. Like, in the VIE structure, does China have an obligation to buy them out if they take the company private or public? You know what I mean? If they take over.
Technically yes, but I don't think it's actually legally. The whole thing is that it's not been legally enforceable. There's a contract in place that gives shareholder rights to investors and stuff like that, the same way that you would have in the United States. But the argument is that the contract is not legally enforceable. So we'll see. This is one of those situations where I think that you don't have answers until you have answers. You know what I mean?
Yep.
I've invested through other companies going bankrupt, foreign companies going bankrupt, but I've never invested through a situation where a foreign company that's a VIE goes bankrupt. So I guess we'll find out how this plays out because I don't think that there's actual legal precedent for this yet. But I know that a lot of China investors, including me, will be looking to see how the foreign debt holders of this company are treated.
Gotcha. I know it is definitely something to watch and take a look at going forward and see what happens because it's going to affect how people invest in these VIEs. So my question to you now, Brandon, are you still a bull in the China shop?
Yes, my China timeline has changed a little bit because these these have gone from being beaten down securities to now what I think are depressed securities. So
let's take it one at a time. Can we start with Tencent?
Oh, for sure. That's still a buy. For sure. Still a buy. Absolutely. Still a buyer on Baidu and Alibaba. But Baidu and Tencent more Alibaba now.
Well, I mean, and Tencent's probably going to get some people buying into that because the Activision Blizzard, what happened there, and all the people selling. So
yeah, I mean, there's what is going on there? You can educate me on this. I saw it today on TV, but I haven't really paid much attention to Activision.
Right, so the story is, there's a lot of people in high positions at Activision Blizzard that have been accused, just accused people, nothing's been proven yet. They have all been accused of sexual misconduct and harassment on a large scale within the company.
Oh, that's no good.
So a lot of people have left the company or are leaving the company or making plans to leave the company, and the stock went down, I think, just 4 or 5% at the news, but I think it's gone down more since. So they're going to have a whole bunch of new people coming in, and so any plans they had probably got put on hold.
Really?
Any games in development probably are put on hold for the moment until they work through this. So that's an opportunity for things like Tencent or Take-Two to take advantage.
Yeah. Well, Tencent's actually got their games on hold right now too because of China's regulatory issues. So
everybody's got their games on hold.
Yeah. Yeah, but there's still a lot of money at Tencent. They're still very cash heavy. Baidu is still very cash heavy. So is Alibaba. And it's funny because of the Activision situation that you just mentioned. That's why I'm a little bit more light on Alibaba now than I used to be. After they had their sexual harassment and rape investigation, where a manager raped another coworker in her hotel room, and then the CEO came out and blamed HR, which I didn't care for that. I think you take responsibility for the culture of the company that you helped to cultivate.
Yeah.
I still like Alibaba. I still think it's a buy, but Tencent and Baidu I like better. Personally.
Copy that. There you go. There's Brandon's new timeline. He's still the bull in
the timeline. The timeline has gone from months to a year, and I'm fine with that because, especially with Tencent, I don't think that it's impossible for the stock to double once we start to get through these regulatory hurdles. And I think we're about 60% of the way there, maybe 70% now. And I think a lot of these regulatory issues are probably going to clear up around next year, which is when, in air quotes, I'll say this in air quotes, okay? Xi has an election in air quotes next year. And then I think these things will clear up. I don't think he likes to have people, challenging his power when these big tech billionaires get to be a little bit too influential and get to have too much power. I think he gets a little jealous over that, but we'll see. Other investors, just so you know, that would be Saba Capital, Redwood Capital Management, Contrarian Capital Management, and Silver Point Capital, according to Bloomberg, from what I was seeing. Because I was starting to search through this, I really wanted to see, is this really a contagion? Do we have J.P. Morgan? Do we have Morgan Stanley and big banks like that with a bunch of money tied up into Evergrande? And the answer is really no. It's not.
It's limited to a few, and the loss is not that great. So the problem with the banks, everybody is thinking Lehman Brothers, but the problem, if you make that comparison, you can't make that comparison because back then in 2006, 2007, I was there during that time when I was trading stock during that time, Brandon. All of these companies held the same paper. They all held bad mortgage bonds. All of them. It wasn't just Lehman Brothers. Lehman Brothers was just the first one to go negative and announce that, hey, we're down $600 billion. You know what I mean?
Yeah.
They were just the first one. The other ones were also down. So that was what the problem was. This one, you have one company who's down. Yes, these other companies are invested in them. So you look at the residual effects. How much money did these other companies stand to lose if this company goes down to zero? And if the total amount is only $3 billion, I know that's a lot of money, and people out there going, that's a lot of money. But if it's only $3 billion to these companies, BlackRock alone could withstand that loss.
For sure. And that's combined.
Yeah.
So,
I mean, so it's not a systemic problem. It's not going to cause this market-wide crash. And so that's why we're saying there was no reason for the huge sell-off yesterday. Now, if there's other reasons for some of the sell-offs, I believe that a lot of companies, such as probably traders on the desk at, Goldman Sachs and Morgan, took this as an opportunity to rebalance some of their positions.
You mentioned this last week about how September is oftentimes a volatile month and a tough month for U.S. stocks. And then I talked about like how I just see it as a buying opportunity. I don't sell because of it going into it, but it's the same situation right now. It's September, so this was a reason to rebalance. You had quad witching on Friday, which we talked about that on text on Friday about how that was going to create some weird things. So, this is just a buying opportunity. And you know what? We talked about Apple last week. I said you might get a better opportunity on Apple. If you want to buy Apple right now, that's fine. Because it is down from last week as where it was. I'm still looking for 139 to get in.
So, let's talk about that. I will eat crow. We had a difference of opinion, guys. If you didn't hear our show last week, Brandon said it was going down. It's going to test the 200-day moving average. I said, there's no way. There's too much good news here with Apple. It's going to go up. I blame Evergrande.
It hasn't tested that 200-day yet. The 200-day is around 134, whereas the 100-day is around 139. And I love to watch those levels on Apple because as soon as they hit as soon as they hit those levels, they tend to rebound, and they tend to rebound fairly quickly. They did it earlier this year. I have a really, really good record trading Apple. It's my first stock I ever bought, so I've been watching it for, more than 10 years now. And I like to watch those moving averages. For some reason, that's the resistance on a lot of stocks. It especially works out well for Apple almost every single time.
It's funny you mentioned it because, like, the first stocks I ever started day trading on a regular, like, it was like, oh, I'm trading this one again and again and again. And it's because of that timeline. It was in 2007, 2008. It was the bond insurers. And it was an easy day trade, money in the bank. You could time it perfectly based on the news that was going to come out that day.
Yeah, I mean, it's just, sometimes some things move in cycles, and you could just watch the support resistance levels and you know when to pick them up. Now, I'm not going to say that Evergrande's not going to have an impact on China's economy. They will. I think that in 10 years we might forget about it, though, because I don't think it's going to be as big of a deal as what everybody thinks it is.
So, hey, ask all these TikTok stock traders who are out there, 20 years old, on TikTok, you're going to ask them about that company in Houston, Texas, called Enron, and see if they remember it. Because if they say they don't know who Enron is or what Enron is, that will tell you a lot about, like, people don't pay attention to history.
Yeah.
You're going to see companies that come up that a lot of other companies are invested in, and they lose, and that didn't have market rippling effects. Again, the difference between what happened to Lehman was all the banks were holding the same debt. It wasn't just Lehman.
Right.
That's what the definition of systemic is. What this is a few companies are holding Evergrande, and they're going to lose out. And it's not good, but they'll be fine.
Yeah. I mean, they've got developed projects in over 170 cities in China. They're one of the 10 largest real estate developers in mainland China and one of the 5 largest real estate developers in the Guangdong province. I think I'm saying that right. Alibaba CEO Jack Ma, former Alibaba CEO Jack Ma, has a minority share in the company, so he's going to get hit, probably. I really doubt China will bail him out. But, so China will have an impact on it'll be an impact there. But I don't think we'll remember it in 10 years unless we come back and listen to the show. And you know what's funny?
In 10 years, I hope for us to have a few more listeners than we do now.
Right. In 2012, Andrew Left, one of the founders of Citron Research, wrote an article that was actually calling out Evergrande and saying that they were likely not going to be, their debt was likely not sustainable. And he got sued and he spent millions of dollars because he lost the lawsuit over this article. And then he got banned from trading in Hong Kong for 5 years. He's still banned right now because that happened in 2016. So I think the ban runs up this year. But he was on CNBC yesterday and they said, well, do you feel vindicated? And he was like, my wallet doesn't feel vindicated and I'm still banned from Hong Kong. So no.
Right.
But
yep.
Yeah, he wound up being right. And I got to tell you, I know short sellers have a bad reputation, but I really do like Citron. And they keep the market honest. So
anytime people talk about short sellers, I talk about the billionaire fight over that health company, Herbalife.
Yeah.
Oh, $1 billionaire. So he still holds a short position on it.
Really?
Still.
Wasn't it Icon? Wasn't Icon the guy that was pro Herbalife?
Yeah. But the thing is, like, he didn't use margin, so you can't margin call the guy. He used straight cash for the short. So he's like, I can sit on this all forever because I use cash, my own money. Pershing Square. I think it was Pershing Square, yeah.
Now, Andrew Left said that if he's not banned from Hong Kong, he'll probably never short there again because it was funny. He made a joke that he said that I guess the way to save Evergrande would be for me to short it because, you know, the news would get out onto the internet. It might become one of those Reddit meme trades or something. So he was saying if he shorted it, it might actually bail him out. But he actually said that if given the opportunity, he might actually purchase some shares of Hong Kong securities, which for him to even think about that, being one of the world's best activist short sellers, and that's what he does for a living, for him to think about the possibility of buying equity in China tells you that he's at least got, there should be some confidence there that this isn't going to be a huge lasting effect.
All right, Brandon, here, let me interrupt you because there was a question that you had for me at the beginning about tapering. What was it again?
Do you think, okay, so it looks like in November they're going to start tapering. And this is where I think we're going to really start getting the deals. Because I keep doing my stock scanner based on the article that I wrote for chinchillapicking.com on how to grade a stock. And I keep having to really reach deep. There's not much available still at a good discount. But I think once the market goes into taper tantrums, and I think it will in November, you might get some better deals there. Because they're tapering their bond purchases, which they're buying tens of billions of dollars worth of bonds. They're tapering it. They're not eliminating it. They're tapering it. And then interest rates are probably not going to raise their key interest rates until next year.
Now, are they just doing the bonds or are they doing the mortgages as well?
I think both.
Is it both?
They should.
Both? Okay. Because I would prefer them to taper the mortgage.
Yeah.
And that way it doesn't incentivize banks to give out subprime mortgages like it's nothing anymore.
Right.
Like, because the government's not going to buy them up. And it would help control that risk in my mind. And it's just, I get shudders from, 2008.
Right.
So. But no, tapering, I mean, are you trademarking that? Taper tantrums? Is that the Chinchilla Picking? You heard of her first?
I got that from CNBC.
Oh,
I'll admit it.
Use it? They already used it. Oh,
they already used it. They used it back in 2016 when the Fed started tapering back then.
Gotcha.
And we went through a little bit of a taper tantrum.
Well, you know what? I'm for the tapering. We need to get through it. We need to eventually cut it. I'm against. I mean, it's our inflation, hyperinflation. We covered that last time. I don't want to cover it this week, but all this tapering needs to be done.
Right.
Let's do it in a controlled, correct way, but let's get it done.
Yeah, Yeah, I agree. And the financials, and not just the financials, because I searched through the financials, and we mentioned Jeffries, which is, kind of in that group. And we've talked about the companies that we think that we should buy going into these situations. But, financials have had a huge run. So last week I mentioned Instar Group, and I was looking into it, and then I would tell you this week if I thought that it was a buy because I had more research to do. And I believe that it actually is. I like Instar Group. It's an under-the-radar stock, so there's not much volume on it. But its DEP ratios are relatively in line with industry peers. It appears to be in a good situation DEP-wise. It currently still trades below a price-to-book value of 1. There's relatively low volume here, like I said, because it's an under-the-radar stock. But its financials seem to have kind of like the higher interest rates in the next year priced in already. This is where I want to go. Insurance also benefits from a steepening yield curve. And risks here, if you're looking at Instar, the risks here would be new unaccounted for COVID variants and the aforementioned China situation that we just talked about. If those spook investors and they cause more of a short-term pressure on the yield curve, that would be a pressure on Instar Group and the rest of the insurance industry's market cap. But I think it's a long-term buy from here. And that's one thing that you want to look at when tapering starts, what happens with the yield curve, what happens with the 10 and 20-year and 5-year treasuries. A steepening yield curve is good for financials. A flat yield curve is still better for tech for the most part. Inverted yield curve is not good for anybody.
We were inverted,
Yeah.
Okay. All right. If you don't have anything else, I'm ready to go into final thoughts. If you don't mind, I'll go first.
Okay.
All right, guys. Final thoughts. If you bought NVIDIA off the story I posted yesterday on Instagram, go ahead, sell, take your 2%. Make some money. Be happy, and that's just because of the caution going into the Fed announcement tomorrow. But we kind of know what they're going to do. They're going to hold off on the taper tantrums till later on this year. Not going to do any right now. I'm still always, every week I say this, I'm a bull on Cooler. I think long term, that's a good buy. It has a lot of upside. There's a lot of good to that company. Get into it if you're not into it. Build a position. And if you're listening to the show and you just are working 2 jobs trying to get on by, throw $20 a paycheck in, man. $20 a paycheck, it'll help you build a position. You know what I mean?
Mm-hmm.
That doesn't take a lot to start trading stock and start investing. There are a lot of free apps nowadays that allow you to do it for free. It's not just Robinhood, just FYI. You can do it with a lot of other companies as well. Do your research. Take your time. Listen to the show. We try to tell you how to research and what to look for. Follow us on Instagram @ChinchillaPickin. Brandon, what do you got?
When we talk about the yield curve, just in case you don't really know how that works, the most frequently reported yield curve compares the 3-month, 2-year, 5-year, 10-year, and 30-year U.S. Treasury debt. A normal yield curve is one in which the longer maturity bonds have a higher yield compared to shorter term bonds due to risks associated with time. An inverted yield curve is one where the shorter term yields are higher than the long term yields, which makes sense because if people are expecting a recession, they're going to want better returns on those short term bonds to get them through the recession, So an inverted yield curve can be a sign of an upcoming recession, and a flat yield curve, the shorter and longer term yields are very close to each other. So, your 5-year, your 2-year treasuries are going to be trading with the same or similar yields as the 10 and 30-year. Just to explain that a little bit more. Also, I mentioned Wyndham as a potential reopening play. That trades as ticker symbol WH, not ticker symbol WYNN, which is what I want you to stay away from. And stay away from Las Vegas Sands. It's not all Las Vegas. It's mostly Macau right now.
Right, and Macau is uncertain in the air.
For sure.
All right, everybody. We hope you've had fun listening. We hope it's been entertaining, educational, uplifting. Because why, Brandon?
Because we want everybody to make money.
Because we want everybody to make money.
Have a good night.